Hi everyone, welcome back. I'm Adam, joined side with April once again, and today we have Lauren with us, our nonprofit consultant here at SACS, here to talk to you about internal controls and risk management. So, internal controls. Why are we talking about that? Well, for one, for nonprofits especially, this is extremely important because you are handling the public's dollars, the public's money, and when there's issues or anything goes missing, there's a public outrage. You see all the time in news articles, with the media, nonprofits are always under the spotlight, and internal controls can really help you avoid that negative spotlight.
So let's give you some examples of good internal controls and things that a nonprofit should consider having a second set of eyes on and reviewing.
So one of the key areas of risk for a nonprofit, of course, is in the area of payroll. So you want to be extra diligent around your payroll process and make sure that there are separate duties for people who input employees or take employees out of the system, people who process payroll, and people who review it. Those should be 3 separate functions to ensure that everything is right and to make sure that there's no false employees being created.
So another big area is also your cash disbursements. So cash is always a big area, very subject to fraud. So really what you're looking for is how the whole process works. Someone processes the checks, someone else is going to sign the checks, and then you have someone else who's really doing the bank recs. You want someone else getting the bank statements. You do try to want to get as many people as you can get in the process to kind of avoid any one person potentially writing a check and especially reconciling the bank recs. The bank reconciliations are really the way people can hide any mishaps or even fraudulent activity. So you really want, especially those 2 areas, writing the checks and bank recs should really be separated.
I think another really important piece is also reviewing the bank statements. The bank statements are usually, for each bank, going to have cleared checks, and it's going to tell you who those checks are being written out to. It's going to tell you the vendor name. And so if you go through there one day, you may be able to spot a vendor that looks unusual, doesn't look right, because we know, even though you've got someone different signing the checks, signatures could be forged. So when you go through a bank statement, I think that's one really great way to be able to see who's being paid and if you recognize all of those vendors.
And also make sure the bank statement you're getting is a real bank statement. I've seen that before where people can fake a bank statement to hide any, I don't want to say illegal or fraudulent, but bad behaviors, we'll just call it. But there's other good stories. So Lauren, you have a bunch, so you spill the tea on that.
So I worked with an organization who we're trying to cut corners. We all want to kind of run lean in the nonprofit sector. And so they decided that the person in finance who was running payroll was also going to be the person that was inputting and taking out employees from the payroll process. So this person, because there wasn't a separation of duties, created a fake employee, input that employee into the system, and paid that employee through direct deposit into his own account. There was no separation of duties, so no one else had their eyes on who the employees were, what they were being paid, and where that payment was going. And in the end, he ended up getting about $500,000 out of the organization through a fake employee. So lesson learned.
That's scary.
It is scary, especially for a nonprofit.
Yeah, that's a lot of money right there.
Yep.
Yeah.
So we're going to kick it off with a question everyone's wondering, why do I need to authorize that?
So nonprofits and certainly their leadership staff are constantly inundated with requests to authorize a payment or an invoice. And one of the key components of internal controls is the idea of segregation of duties. And the easiest example of that would be that if someone wanted to request money to pay, say, an invoice, the person who's making that request can't also be the person who's approving that request. So you need an extra layer or another set of eyes on those types of requests, and that's what we call segregation of duties.
So does a nonprofit necessarily have to hire more people in their finance team?
They do not. They do not. It would be really great practice if there was some cross-training, but certainly your executive staff and sometimes program directors can be the people who are authorizing payment requests because they're the ones that know the program and know the budget best.
Good point.
So from a board perspective, how important are internal controls? They're not really in the day-to-day, but they have a fiduciary duty, correct?
Yeah. So in order for the board to actually exercise on their fiduciary responsibility, there must be internal controls to protect the finances of the organization and make sure that everything is done with integrity. And again, because we hold the public's trust, right, those dollars are taxpayer dollars, we want to make sure that every single dollar is stewarded. And you can do that through your internal controls, policies, and procedures.
I'll also add, so for nonprofits who receive government funding, this takes an extra level of importance, because there's an extra level of transparency for those kind of nonprofits. And if you have government funding over a certain amount, so you have previous episodes to get an idea about uniform guidance rules. But once you hit a certain dollar amount, you now need to disclose in your statements if you have any issues with your internal controls. That could be internal controls over financial reporting, or even internal controls over your compliance with government grants. So now this is really just public information for the world to see. So you really want to make sure that you are having best practices when it comes to your control environment.
Yeah, that's a good point, because if you get a regular audit, not a uniform guidance audit or a yellow book audit, a regular audit, if you have any issues with your internal controls, we have to report that to management. If you have any internal control deficiencies and you get a government audit or a uniform guidance audit, unfortunately, your auditor has to put that into your financial statement and single audit package. So at that point, it does kind of go out to the public.
Yeah.
Absolutely. So let us know if you need any help with your internal controls.